pretty sure on every single news outlet at the moment and every single social media site you have seen something related to either inflation or the mortgage interest rate rises. And in the last week, we've seen significant changes there. So today on Taking Care of Business, I'm joined by the big guy, the CEO, Lewis Allsopp, our head of data or director of data and digital transformation, yes. Lynnette Sacchetto.
The longest job role ever created.
And we've got Andreas Duhn, one of our mortgage advisors here at Allsopp Allsopp Mortgage Services. So
to
guys,
give us a good insight. You're the expert here today, by the way.
Yeah, so
Lynnette's the data.
No pressure. You need to teach us.
Me and Carl are just two brothers on a podcast, and we bring experts in to talk through the mortgage rates. So obviously there's been a massive bit of news around the world about the central banks raising their interest rates. Obviously you are the expert in mortgages. Tell us a little bit about what's happening and what has happened.
Yeah, so a lot's happening. I mean, in my role, I see the front end and product changes here in the market in the UAE. If we talk in a more general sense, I think what we're seeing from the States and from the major economies in the West is a move to dampen down inflation.
Okay.
And they have really one weapon for this to change rates and to rise rates to put it down.
What's the purpose for that? For anybody that's not really into mortgages, obviously I know personally because my mortgage repayments are going to go through the roof, which we'll discuss later. Is that the purpose? Obviously with the interest rates going up, you're the expert in mortgage, you've been doing it a long time. What is the reason that they would do this?
The main driver is to cool in inflation. Okay. There's a big problem probably in the world at the moment with a supply issue.
Yeah.
And frankly, costs are rising too fast for people. So that the governments are obviously weaponizing that to
well, inflation in the US as an average is what, just shy of 9%, just below 9% as a whole, and obviously in some areas it's far greater, 30-40%. Mm-hmm. And obviously there is a debate which we talked about in previous podcasts about whether interest rate rises will impact that. But what was the difference last week? It was quite significant. It was the largest rate rise since when was it? 2004, I believe.
1994.
1994.
Ghostbusters was out first.
Yeah. Just about remember it, but yeah, I mean that's a significant rise. I think perhaps what's making people a bit nervous is the pace of change now.
Yeah.
As we've emerged from COVID, as I say, the governments are using their main weapon, which is to change rates fast.
And the narrative is that these rate rises are likely to continue, certainly for July, September's Fed rate reviews. So we'll talk to you a little bit in a moment about how that actually impacts you, because when you actually see the news, it's quite scary. You know, interest rates are going up. How will this impact the marketplace? They're trying to dampen inflation. Inflation, which I've talked about in previous podcasts, very normal. If it's around 1.5–2%, that's normal year on year, but we are way above where it needs to be at the moment. But we'll come back to the actual monthly spends in a moment. What Lynnette and I were talking about just off camera a moment ago was actually probably links quite nicely in what we're talking about. Inflation. Lynnette, tell us a little bit about luxury spending, so people spending on luxury items, the increase you've seen or the data you've seen over the last couple of years.
Yeah, so just to kind of throw everything into the mix, just to understand what's happening with inflation, Bank of America, now obviously this is very US centric, and I think a lot of the problems or a lot of the actions that we're seeing right now are very US centric that are affecting countries like ours. But Bank of America did a survey this year, and luxury spending is up by 14% year to date as of May.
Wow.
And then if you look at US luxury spending as a whole, it was 47% higher in 2021 than pre-COVID 2019. So this is when we were coming out of COVID. It's crazy.
People are not going out. What are they doing with their Louis Vuitton bags?
Where is this money coming from?
And then jewelry spending was 40% higher.
Wow.
So it's and then if you look at the reasoning why they are increasing interest rate, the idea is to curb demand. If you make it more expensive, people are not going to be buying. However, I personally believe it's a supply chain issue. It's not a demand issue. If you look at the two highest, so if we break down just here in Dubai, so the Dubai consumer inflation rose to 4.6% in April, which was the highest since May 2015. So the main driver was transportation costs, obviously fuel, at 28% year on year.
Wow.
So fuel went up 13% in June, and it's been up 56% since the beginning of the year. And then that was followed by food prices, which was up 8.6% year on year. Now, really, are we going to stop buying fuel or stop buying food? No. So it's not so much of a demand issue, it is a supply issue.
But the crazy knock-on effect with let's say fuel, and people go, oh, you know what, it's just my car. No, your flights go up. Everyone that wants to fly now is probably paying 25% more than they were paying. Anybody that has a boat, a car, anything at all, you are being affected. So there is a knock-on for excess money that's left in your bank.
But to businesses, let's say also high maintenance, the guys driving to a job now costs us more money just to get them to the job.
Yeah.
So it's impacting everyone from that side of things.
I think a lot of people during the height of COVID lockdown saved a lot of money as well. And I don't know if we'll come on to it, but the banks did the same. The banks weren't lending to businesses at the height of COVID, so there's still quite a positive scope for the bank to lend.
Yeah.
Interesting times. Obviously, we've seen that that 0.75 rate rise happen in the UAE also, as we're pinned to the dollar here. But slightly further far back to our home country, the UK. I seen some news yesterday which is absolutely mind-blowing. They are in talks to remove the stress test they have in place. So in the UK, they've got a stress test where they have to monitor someone's affordability based on potential rate rises, which was put in place in 2014. They're talking about getting rid of that. What do you think the reasons behind that is?
That is the wildest thing I've ever heard. So just so I understand this for anybody else that's trying to recap the message you just sent me, the banks in the EU are saying that we will not look at how much money is coming in versus going out.
They're
easing.
No, what they're saying is they will now disregard any potential rate rises. So before that, you would have to factor in a potential 3% rate rise that might happen into affordability. They're saying don't matter anymore.
So every person who's getting a mortgage, they're saying good luck, get a mortgage, but we know you can't afford them 3 years if interest rates go up. The only way you're getting around that is obviously a fixed mortgage.
They're capping it at 4.5 times yearly earnings, and then they're now saying we are not factoring in any potential rate rises. That's the only thing we're looking at. So the way I look at it is they're actually trying to make it less friction for people to get a mortgage, and particularly with the rate rises, but it's a bit concerning where this might end up leading.
What do you think of that?
It contradicts what they're doing in the States completely. So I struggle to understand exactly. And now this is the Bank of England, right?
Correct, yes.
Yeah.
They don't know what they're doing, old Bozza. I don't know. He's just having a go, any old Boris. He's just
He's trying to win votes, isn't he? For the next election.
But if you bring it home to Dubai and look at the effects, so I was looking recently at the developers. So there's developers in Dubai at the moment. They're doing 2 things to counterattack the measure, because we'll go on to the cost of someone buying a house, but effectively it costs a lot more money to buy a house monthly repayments, which we'll discuss if you've got a mortgage, how that will affect you. But what developers are doing now is 2 things. They're bringing back longer payment plans. So they're now doing the 5, 6, 7 year payment plans again. And more interestingly, they're giving discounts to properties. Developers have got ready properties. They're giving 3 to 5% discounts of the property value. So developers are quick. They're on the mark with it.
Actually, buying off plan at the moment has probably never been more attractive than ever, because of the interest rate rises. You're paying potentially the whole property over a longer period. So
definitely.
What about day to day then? So we talked about these rate rises, and it sounds really scary, and it is going to impact us all. But last week we've seen a 0.75% rate rise here in the UAE, 0.25 in the UK. We are probably likely to see more rate rises in July and September. That's the narrative we're hearing. What does that mean to us? We have mortgages. What does that mean per million dirhams?
Very simple as that.
What difference will it make?
Yeah, I mean, first of all, as I suggested earlier, I think it's the pace of change which is unnerving people. One thing I wanted to highlight was that actually interest rates aren't high. If we look back historically, they are below the average that they've been in this country over 20 years.
What is a high? When was the last high point higher than this, for my reference?
So at the moment, what we call 3-month IBOR, which is the interbank lending rate, is about 1.9.
Okay.
If we talk historically in the century, it's been about 2.3.
Oh, wow.
The highest in recent years was about 2.9.
Okay.
So we are still below historic averages.
So people are using the low interest rates before as an excuse to really moan that it's high, when reality is, if you look at historically, people were paying that anyway. Is that what we're saying?
Exactly, yeah. And I think while it unnerves people, those people that are on a fixed mortgage and perhaps will be for the next couple of years needn't worry, because we're likely to see short-term rises. Beyond that is anyone's guess, but it may be in 2023 that things start to settle again.
And do you think that's down to the supply issues, that we think it'll be down to. And that's what a lot of people are saying, obviously, when things like cars, I mean, there's a perfect example. I said this in the last podcast. I went into the watch dealer, and the watch dealer told me that watch prices have gone down 20% in the last 4 months. And I said, why have they gone down? Because Rolex, Audemars Piguet, these companies have not been able to obviously make the watches. In lockdown, they absolutely exploded. And then the guy said to me, he said, you should sell your watch. I said, I'm not selling my watch, like, get off me, leave me alone. But literally, I went in last week and he's like, yeah, they've dropped because obviously there's more supply coming back in. So I think that pretty much concludes the argument, where I think cars, watches, whatever it may be, if they come into the country, then...
How long will this take, though, to catch up? I know obviously it can differ to different segments, and obviously what's happening in Russia has an impact also. But is this more than a 2-year thing, do we think, in terms of the supply?
So for supply, obviously the Russian-Ukraine conflict is going to definitely continue to impact on fuel and food. And as long as that's going, we're still going to have that issue. There's been many different governments who have been trying to combat the fuel issue to compensate for what's happening in Russia and Ukraine, and no one can come to an agreement on it. Which is why fuel prices are through the roof. I don't know if you guys seen in the U.S. how much fuel is in New York.
Just shy of $5 or around $5?
No, it's $9.
Really?
Yes.
For a litre?
Yes. No, gallon.
A gallon?
Gallon,
Okay,
yeah.
fine. Wow. That is wild, isn't it?
That's crazy.
So what do you reckon it costs to fill your car up then? It must be like $200 or something for a normal car. Mm-hmm. Wow.
Yeah.
To be honest with you, even in Dubai, my car to fill it up has gone up like 40% to fill it up.
If I was Elon Musk, I'd be rubbing my hands.
Oh my, yeah.
Imagine all this petrol in.
Nice soft hands. Put my hands together, baby. Just rub my hands.
Coming back to the actual price per mortgage, and so you just did go through some just absolute real basic figures per
million dirhams. How much was it 2 months ago? What is it going to cost someone now?
Yeah, so if we take, let's say, a 1% rise per 1 million of mortgage loan, then you might be talking in terms of your EMI, your monthly's about 550, an extra 600 per month. If you're on a variable rate mortgage, again, if you're on a fixed rate mortgage, these things won't affect you now.
Yeah.
But
in the last 2 months, we've seen rate rise at 1.25%. Is that right? 0.5% plus 0.75.
Yeah.
Last couple of months. So realistically, someone's mortgage would have gone up around 700 to 800 dirhams roughly.
Per million
dirhams.
That's right. I mean, how much of an impact that will have on people will vary based on circumstances. I think with everything else rising though, with petrol on the rise, food on the rise, these things, everybody's looking at rises at the moment and panicking slightly. I think when it comes to mortgages specifically, it just highlights even more the importance of shopping around for your mortgage to make sure you're getting the better deals.
And who do they call if they need a mortgage? Not the Ghostbusters.
What does the difference between a fixed and a variable look like at the moment? Because some people may gamble with what's happening and opt for a variable, and obviously.
So just for anyone watching that's not clued up with mortgages, what is a fixed and variable in simple terms?
So a fixed rate deal basically is where payments don't change for a fixed period of time, normally up to 5 years here in the UAE. A variable rate mortgage is literally up and down, so the amount you pay will vary depending on what interest rates are doing.
And that's on the IBOR, yeah?
That's
effectively.
based on EBOR, yeah, with the vast majority of
And
banks.
what's the advantage and disadvantage between the two? Because obviously, with a variable, the attraction is typically a lower rate, right? Whereas you're paying a bit more for a fixed, but you have security.
Exactly. I think most of my clients prefer the security of a fixed rate deal, but many of the banks have begun to pool them, so there's less of them available. If we talk about something like a 5-year fix, the best one on the table at the moment is coming in at 3.75%, which remains a really good deal, I think.
Very, very good.
Yeah.
Very good. And no caveats with pulling that with the interest rate rises, because potentially a bank could be underwater on the product.
Things are changing so fast when it comes to products here that we could be having this conversation next week and the 3.75 is no longer there. Yeah. So what I'm saying to people is that, look, if you've made a decision that you want to buy a house in the next 60 days, get your pre-approval application made now so that you can lock in a rate effectively.
How's that compared to other lenders? Because you say about fixed rates being pulled, which I completely understand, by the way, because of the volatility in the interest rates. But how does that compare to other rates in the market, just as an average? Is it what is the average for a fixed rate at the moment?
Around 5%, I would say.
And then what about a variable? What will people be paying for a variable?
So variable, obviously, is made up of two component parts. The variable element is the IBOR we talked about, and then the bank's profit margin. Profit margins actually for the banks are lower than they've ever been.
So 1.7, I think.
1.7 would be about an average, some as low as 1.5.
So at the moment, if you're on a variable, you're getting 1.8, 1.9% for the IBOR plus the 1.7%. So effectively, it's cheaper at the moment to be on a variable than a fixed.
Exactly. So the benefit of a variable now is that you'll pay less now, but you'll have less safety going forward.
Yeah.
Yeah.
And we've touched on this in previous podcasts. Fed rate reviews are in July, September, and I think there's another one before the end of the year after that.
I believe September's the last one.
September's the last one.
Yeah. So they're now, after this one, they're saying that the next one in July is going to be another 75 base point hike. Then they kind of want to see how things are going to go and then decide in September what the next hike is going to be.
It's interesting because it's not related, but it's kind of related. The stock market's off the back of the rate review. The stock market's bounced
Yes.
marginally, still down for the year. But is that a confidence thing in terms of the market's thinking that the Fed have actually got an idea of really kind of how to close the gap on inflation?
Honestly, I mean, I'm not a chief economist by any means, but I think that they are just reacting to how they've always reacted. So the Fed does one thing, the stock markets do another, and it's always been the same cyclical kind of actions.
I agree. It's a bit like if crypto goes down, the stock market goes up. If real estate goes down, the stock market goes. It's investor confidence, isn't it?
Yeah.
If they think that the money's not secure there, they see where else they can place it. You look at gold. Gold flies through the roof if the stock market collapses. Gold always goes up, always, because it's a safe haven for people, isn't it? Mm-hmm. So I think it is just a reaction to what's going on.
You're dealing with someone today, Andreas. What would your advice be in terms of mortgage? What sort of things they need to keep an eye out for? Is there any charges or anything that people need to keep their eye out for? Do you look towards a fixed rate? What's your view on things?
There are all kinds of things that I'll point out to people that they won't hear from the banks directly. So again, I think speaking to a broker, somebody that's independent that can work with all of the banks, really works well. So that the costs we tend to compare will be the value of something like a fixed rate, but we'll also look more transparently at the mortgage product as a whole. So we'll look at the costs of insurance, the upfront costs of processing fees and things with the banks. So those are the things that can get missed. But when we talk about interest rates, again, I don't think people should panic. While the pace of change is very, very sudden, interest rates generally are low. So
this is
the trade-off. Time to get a mortgage, in my opinion.
This is the trade-off I would have if I was a buyer and I'm looking at buying a house: is can I make more than 4% capital appreciation on the buying a house in Dubai at the moment?
Yes.
I think Dubai's gone up something crazy like 10% in 4 months or something whatever the numbers are. So in 4 months, you can make the difference of the interest rate gain. And I think that's what a lot of people are going to go for. It's that fear of missing out, isn't it? If you don't get on the ladder, do you swallow the interest rate, or do you stubbornly go, interest rates are going up, I'm not going to buy, which means that I don't want the capital appreciation. So I think Dubai is in such an interesting, to be honest with you, not just Dubai, the real estate world, London is, New York, they've all gone up. I just don't see the interest rates stalling property prices.
I think here, no way. I think there's too much goodwill, good sentiment for Dubai. Yeah, it may have an impact marginally on some people that are on the fence about buying, but that's with anything. I'm hearing different in the US though, Lynnette. I'm hearing that it's impacting the US more than different parts of the world.
Yes, it has significantly actually. Yeah. So 3 months ago, so typically the US market has 4 to 5 months stock available on the market, all of US. 2 months ago, it's less than a month. Today, we're back to that 4 to 5 months. So demand has decreased significantly. Supply now is there. Prices have kind of stabilized, if in some areas have gone depressed. So yes, it has affected the US significantly, pretty much across the board.
If you had your crystal ball, I know you're not a predictor.
She is a predictor.
No, she likes today's not opinion, but if you had your crystal ball, how do you think this might impact here, if at all?
I think we sit very uniquely here in Dubai. And I think with all of the initiatives, September, a few months from now, we're going to start to have the new visa schema. You have a lot of high net worth individuals coming in. There's a lot of cash. Last month we saw Russians as our number 2 clients. I don't really think it's going to affect us significantly, actually at all. So prices have increased by value 17% in 6 months.
Oh, there you go then.
So I do think that we will start to see more activity on the off-plan sector, because right now we're at like a 40-60 split, just because of the incentives that they're coming out with, which is very smart on their end. I'm actually interested in some of the projects. I don't really think it's going to affect us, honestly. And if you look at rents and how much rents have gone up, it's double than what you would pay for your mortgage for like.
The last thing that I will leave my 2 pence worth, or 2, not dirham, what's 2 fils worth? Can you say 2 fils? Yeah. Is I think this is going to be the interesting part of what's the piece of the puzzle at the moment, is whether or not businesses push their losses onto consumers. This is what I was reading about before, because there's a lot of businesses at the moment where inflation is taking place, not just on petrol, because petrol is one thing. You can see that affects us and maintenance and our agents doing viewings, and then anything, even Deliveroo getting petrol. So let's just use Deliveroo as an example. They're now operating at less profit because every driver uses petrol, but I can pretty much guarantee you their delivery fee is going to increase.
They will pass that on for sure.
They're going to pass that on, and I think this is what I've read in a report recently. A lot of businesses are going to pass on the inflation as a fee to the consumer in some way, shape or form, and I think that's where we're going to end up going. Which makes it more expensive again for the normal person.
Yep.
One last thing for me, using a mortgage broker, this isn't a sales pitch. You don't buy the first car you look at. Typically, you don't buy the first house. You don't buy the first dress or suit you see a lot of the time. So don't just speak to your own bank. Even though you've got a relationship, speak to as many people as possible, because in today's mortgage market, there are lots of weird and wonderful little things that happen with regards to areas where you can save money, add a bit more security. So speak to this guy here, Andreas. Will get his details on the bottom of the video at the end, and he could save you a lot of money and also take a hell of a lot of stress away from the very stressful home buying purchase.
Thank you, Carl.
Cheers, guys.
Thank you very much, guys. Bye.
Thank you.